Hey traders, Raghee here. Welcome to another episode of Charts and Coffee. Cheers. Got to release the Kraken mug today for this Thursday. Great to see everybody. Audio and video should be good to go. All right, so let's get to it, gang. Oh, we have the guest appearance by the cat in his throne today. You guys can see there over my shoulder. The trading cat. He has put on a trade. I no joke. He has stomped on the keyboard because, you know, cats don't care. And he has entered a trade. It was a winner, I will say. All right, so let's get to it. Thanks as always for the questions. Let's go ahead and kick this off with good morning. Good morning. Could I comment on how much on the much anticipated correction? So, Maruf, I hope I'm not butchering your name. As a Raghee, I can sympathize. My friend, I would say this. If we're talking about it, not going to happen. When we talk about correction, though, let's separate correction in I haven't turned on my my TV yet, but correction, so to say, in financial media is typically your 3, 4, 5% or greater move. So it's really going to insinuate a reversal. Let's go to the daily time frame here of the S&P. So correction in the sort of financial media way is going to be that larger move to the downside. For me, retracement would be more a valid and actionable move, where what I'm looking for is a move within the context of the existing trend back into the support of what I would see as the backbone of trends, which is the range between the 34 EMA to high and low. All right, so with that being said, if we're talking about it, probably not going to happen. It's when that conversation fades. So what I would be, especially if you're keeping your antenna up for anything, and I love that you are, what we want to keep an antenna up for is when suddenly we no longer are talking about corrections and bubbles and Fed bubbles and suddenly the optimism returns. That's when you want to be aware of that retracement. Could it turn into a correction? Right now, not on this Fed's watch, right? What you want to watch more tactically, and these are things that I talk about in the futures room, in the sector secrets mastery room. We've talked about them here in Charts and Coffee. You want to keep an eye on the pillars of macroeconomics, namely two: money supply and the related to that, the balance sheet, the assets. When that starts to level off or even heads lower, there's going to be your tantrum in the equities markets. All right. So thank you for that question. To get a conversation started, A2K, hey there. If I get a chance, can I take a look at LMND? Sure. For a long, seems to have good structure. Earnings are on March the 1st. Okay. All right. So LMND. Yeah, it's an interesting place we've started to congest a bit at. I wouldn't quite call it as tight as a consolidation, but yeah, this is a retracement, kind of the aforementioned conversation about the retracement. This would be a retracement. And so what I would look for is that move down to this Darvas level low or these previous lows, 140, 180, 140, 170, or even this volume area around 147.80, right? And then look for the market to move back up to a swing high. So I don't have a problem with that. So what I would say is backtrack a bit and just do a reverse search on lemonade, that cool, refreshing drink. So if we want to know where the LMND weighting is at, I mean, I would definitely make that reverse search part of your process. Know where you are within the ETF world. Know where you are within passive investing. And I think Lemonade is probably one of those names that's uncorrelated in most ways to anything that we would consider this broader passive investing ETF index influence. So good stuff. Definitely an uncorrelated kind of move. James, how you doing, my friend? Good morning. Good morning. I started the ultimate day trading class. Very cool. Very cool. In fact, we'll be day trading in the futures room here in about 14 minutes. I'll be heading on over there. A mountain of info, 6-hour class. 6-hour class. I completely. So my partner here in the office and I structured that class. Really, it's a complete brain dump of what I do the first 2 hours of the day. Very much, look, there's two approaches to day trading, and neither is right or wrong. But one is sort of that very rapid fire, just keep getting in until you get a decent little move. I don't think that most traders can follow that approach, because you'll end up with a lot of little losers before, or even if you end up with a bigger winner, or you'll end up with a lot of small wins. And that's fine. I don't like that kind of active, rapid fire type approach. I think that in reality, most traders are not emotionalists. I'm not, right? Enough to just take those small paper cuts before getting a big win. So I'm a little bit more of an assassin, right? What do? We take our time. We kind of stealthy move in on the market. We start looking at levels that most people aren't looking at. And I think it's a very selective process. I think just because you shorten the time frame, you're not necessarily increasing activity. The activity is increased, not because you're forcing it, because you've got, the ability to take advantage of real-time data, short-term time frames. The time frame itself, think about it this way. Not that stocks are truly a 24-hour market, but there's 1,440 minutes in a day, in a 24-hour day. 1,440. So because of just that sheer number of short-term time frame candles, intervals, you're going to get more opportunity. Let that be the reason for activity, and not just the fact that we can, right? And you're going to see that runs through all of my trading. So thanks for checking that out. I'll look forward to the feedback, James. AVTR. James, this was one we talked about on Monday in the Sector Secrets room. And if there's anything that, look, I like conservative entries. I like low risk entries. I like low cost entries. And so this was one we were looking for. And we had the levels out there. I think I talked about this one. I love the structure. It's moving higher. I'll just have to wait and refire this one, recalibrate, refire. What does that mean? Determine what those pullback levels are going to be once again, and then put those alerts out there with the optimism, the expectation that, well, time and history have told me that we're going to typically see a move back down within the context of a healthy uptrend. This is a nice double green. I won't chase, right? Chasing are for Jack Russells after school buses. There will be another bus, and we'll catch the next ride. Yeah. So thank you very much. Thank you very much. All right. Next up is, hey there, Stephen. I was looking at FVRR. It's so funny you mentioned that. I was looking at Fiverr on a scan. Not at these highs. Not at these highs. Yeah. And I had a lot of questions about Tesla as well, gang. Look, when Tesla's moving higher towards 900, I get a lot of questions about Tesla. And then unless you're a double green devotee and you're looking for those pullbacks within uptrends, now this is when this thing looks interesting. Now, I think a lot of folks are a little concerned that, I don't know, there's been a lot of chatter about SEC again with all right, look, Elon Musk and the SEC, that's a thing. But I would take any, and I don't even know that's the narrative, but I know suddenly it's pulling back. It's not moving with the broader averages. Realize as the NASDAQ's moving higher, Tesla's your fourth heavily weighted stock within the NAS. And it's heavily weighted within the S&P as well. So it's moving against the tide. It's a huge boat moving against the tide. So yeah, I really want to take advantage of it. And where it's moved down into now, this gets interesting. Now it gets interesting. Anything earlier would have been aggro, if not flat out, not a setup. Now you're looking for put credit spreads. That weakness is what you want to take advantage of. Now, if you want to get long calls, this weakness is what you want to take advantage of. If you want to leg into a call vertical, which is oftentimes what I'll do with something like Tesla, now is the time, that bearish momentum to the downside into support. That's my bread and butter, gang. All right, volume's gone down on a linear basis. the last several trading days as we continue to print at all-time highs. So unless we get some volume coming into the indices, there should be a pullback soon. Yeah, it sounds as good. It sounds as good a theory as anything else, my friend. But I'm not going to guess at a pullback. That's not what I get paid to do. I get paid, and I hope you're right. Let me just say that. I hope you are right. Now let's talk about a few tendencies, while we're up to it. So this is something that I've bought for many years. Just kind of keep it on my desk, and it's there you go, Stock Traders Almanac. And so let's talk about this weekend. And this is what today, the 10th, yesterday, the 10th said. So the week before February expiration week, the NASDAQ was down 11 out of the last 20, but up out of the 8 of the last 10. When you talk about seasonals, when we talk anytime about seasonals, gang, we've got to take a seasonal composite, understanding the look back of the seasonals. Let's pull up this NAS. Here's a 5-year composite of the NAS. I think composites and look backs on any type of service you're looking at, and listen up, gang, because this will save you some pain. If you're looking at look backs and composites on markets that extend pre-08, so really anything over 12, 13 years, the tricky thing is the composite look back since 08 or just the last 10 years are pretty much all going to be markedly bullish. So this one really, this particular date on the almanac is really interesting because 8 out of the last 10 years, the NASDAQ's been up. I think that does reflect the overall market that we have been in and that we are in right now. Now, one other thing, the day before President's Day weekend, this coming weekend, the S&P has been up 9 out of the last 10. Now, remember, the S&P is typically going to go where tech, financials, and healthcare led it. So kind of interesting when you look at the last 9 of 10, again, inside that very bullish post-08 window. Why do I bring that up? Because I think that's a really good sort of segue to your question, which is, my friend, yeah, we're probably going to pull back at some point, and I hope we do. But from where we do that, I won't guess. But as long as we're talking about it so actively, as long as it's being discussed in financial media, again, my theory, and it's been this way for 30 years, pullbacks, retracements, corrections, crashes, whatever you want to say is that movement lower. It doesn't come when everyone's talking about it. It doesn't come in a way where, we were talking about it last week and here it is. Maybe 2 or 3 weeks from now or whatever that time span is where people stop talking about it, then heads up. So yeah, I agree with you though, and I hope it happens. Again, that's going to be the opportunity. Hey there, Tim. Good morning. Good morning. After big moves in names like Teva and Matt, you always reference waiting for an inside day. Mine are low. I'm doing the same thing in corn and beans. If you guys checked out the video yesterday where I discussed ZCZS for my futures traders out there and discussed CORN and SOYB for those of you that want to take advantage of this move in ags and grains using an ETF. Discussed that as well. And so even in that example, big move post USDA crop report numbers. And then I wait for a particular candle. And you're right, I'll be doing the same thing. So let's take a look at, you mentioned Teva. And yeah, so by the way, why the big move? Earnings, right? Why do I not like to be in for earnings? That's why. That's why. It's a very binary approach. This is post earnings. So I love the timing, Tim. You're using earnings as that volatility trigger for that correction to the downside. I love it. So in this example, yeah, I'd like to see that little bit of a inside day minor low pattern. We may or may not get it, but as long as we're post earnings, if I get a pullback into the wave on these, then yeah, I'm quite interested. And Mattel's been on my radar. Teva hasn't, but Mattel has been on my radar. Okay, let's see. Next up is when I leg into, hey there, Alex, when I leg into call debit spreads, what do I use for exit parameters? I mean, it's the same target. So what's really interesting, gang, is that the timing, think about this for a moment. The timing for long calls, legging into a call debit spread, or a put credit spread. They're all the same timing. Clearly the strategy is different. What I'm buying or selling is different. But I think what's really interesting is that the timing, the zone is the same. So then I'm going to take that to the opposite end of our trade, which is our target. Same thing, my friend, swing highs, major psychological levels, Darvis levels, volume levels, stepping out in front of new highs. So the target is the same. The target is really the same. The logic behind what I think the market is going to do and how I'll respond doesn't change because I've written premium, written an option versus paid and bought and got long an option. The targets are still the same on the charts, which is why I believe a lot of options traders would behoove themselves to understand volume, to understand price, to understand time, and then ask yourself, what would I do with the underlying? Because if there's no trade in the underlying, my approach is there's no trade in the derivative of that underlying, aka the option. So same parameters as if I were in the stock or the futures contract or the ETF. All right. So thank you for the question, Alex. Good stuff. AMZN. All right. How you doing, Ron? I have not been as interested in AMZN. One, XLY, which is one of the ETFs that pretty much make up, AMZN pretty much makes up XLY, the consumer discretionary ETF. And it's not really been trending. There are a lot of other names that are trending, and this just isn't one of them. So one of the things that a number of our traders do, whether it's in the Sector Secrets Mastery or the Futures Room, is they've said, hey, Rag, if we've got a yellow market, because they've tested this, every strategy has an underlying environment. And this is not opinion, gang. This is fact. And if you can embrace this, it's going to make an absolute needle mover of a change in your trading. Every single strategy has an underlying environment that it works ideally in. Collecting credit works really well in range-bound markets, And so some of our traders have been doing things like iron condors in this market. Now, I would say that once these propulsion dots, you can see right here, once these have started to form, as they have, this is where you probably want to slowly shut that down. And we can see through November, December, January, February, most of February, half of February, we didn't have that. Now we do. So I'd be very careful doing that. Now, this is looking like it might turn back into an uptrend. And that's where I don't want to focus on collecting credit, more non-directional, undirectional type markets. And I want to focus on a directional trade. And remember, call a vertical spread, put credit spread, long calls. Those are directional plays. So that's where you want to ask yourself, okay, I've got my non-directionals and I've got my directionals. And is the underlying environment friendly to which one? Yeah. So great question. Thank you, Ron. Apollo, guten Tag. Yes. Would love your view on CLVR. Hey there, Cindy. All right. So Parabolic, my friend, there's not much I can do with this until it comes back down to earth. And look, scanning for parabolic markets is really about volume moves. It's really about crossing 20 and 50 period moving averages, coming out of consolidation. There's a lot of markets like that. But at this level, I'm sure there's some folks who have strategies and like these kind of markets. I would have to wait for a little bit of a pullback. And I typically feel that if you're in a move like this, it's got to be earlier, not now. So there's not much I would do with it, Cindy. Thank you for the question. But yeah, not much I would or even would recommend doing for it. Starbucks. All right, this will be our last question for the morning. And Starbucks, is it getting ready to gear up? We've made it through two key volume levels that I feel were overhead. We gapped through one, we're sitting on the other. And so, yeah, I would say we're probably, yes, Starbucks is probably gearing up for higher highs, but this is what I'll say. Let's focus on markets that are better structured. I wouldn't bet against Starbucks. I would also take some profits up at these levels. And then for T2, look for those breakouts and higher highs. So thank you very much. Not a lot of overhead volume in the way, but I'd keep an eye on, whether or not we fatigue here again. All right. Okay, gang. As always, thanks for joining us for Charts and Coffee. Big thanks to the crew here. All right, I'm going to head on over to the futures room. I'll see you all in the Sector Secrets Mastery later on. And then tomorrow, those of you that are in the options room, I'll be with you guys for a midday session. And we'll get into some watch list building and things like that. All right, enjoy your day. Post-Powell, let's see what the market's got. It looks to be an inside day right now on the averages on the daily. So bullish bias. We'll see what happens. Be good to each other, gang. I'll see you tomorrow.